your wealth over time, you need to manage your investments very well. But all investments carry risks. So, in your investment portfolio, how will you minimize overall risk at the same time maximizing your investment returns? We have our investment expert, Mr. Sadish Prabhu, with us to explain how to reduce risk in your portfolio. Sadish, over to you.
A study has shown that asset allocation is the highest contributor to risk reduction in a portfolio, which results in higher risk adjusted returns. Now, you may ask me, what exactly is the risk? The risk is that of fluctuating returns. And where do you see the highest risk? You see the highest risk in equities, because equities fluctuate a lot. And that's the reason all of us do not put all our money in equities. I'm sure the entire audience here, I can vouch that all of you have not put everything in equity. You may have put some money in gold. You may have put some money in bank deposits. You may have put some money in real estate, but you will not put all your money in equities, because equity is a volatile asset class. You'll still have people putting all their money in, say, a bank fixed deposit. Why do they do that? Because it carries lesser risk, because the returns don't fluctuate. They provide you the returns that are stated. Equity doesn't do that. Equity fluctuates, and that is the risk that is involved. And each one of us has a different risk-taking capacity or a risk appetite. Some may say that I'm willing to take a higher risk. And what do you mean by that? I'm willing to accept the fluctuations in equity. But recently, I've come to know a different paradigm. And some of you may agree to that. The risk appetite of an investor is different in a good market, and it is different in a bad market. It is similar to mood swings. Typically, if you want to ask, a child wants to ask something to their parents, something big, they check if their parents' mood is good. If the mood is good, they know that they will get it. And if the mood is bad, they know that they will not get it. Similarly, I found that people say that I'm a risk taker. I'm willing to invest a lot of money in equity. But they say this only when the markets are good. If the markets fall, like in the current market environment where nothing is good, I mean, there is a geopolitical event going on outside India, while India is looking relatively good, but the other markets are not. In such a situation, you'll find that the risk appetite of people changes. The same person who said that I'm willing to take a lot more higher risk in equities maybe a year ago, today says that, oh, wait, I'm not willing to put a lot more in equity. I want to wait for some more time. I want to check if the markets are, how the markets move over the next 1 or 2 quarters. So people also check the mood of the market and they invest. And that is what I meant by risk appetite. So you have to gauge your actual risk appetite. And your actual risk appetite is how much will you stay invested in the markets if they are 40 or 50% down. That is when you actually know whether your risk appetite is high or your risk appetite is low. So asset allocation basically is the highest contributor to returns when you look at it from a risk adjusted basis. So you have to say that if I had the same risk, for the same risk, whichever asset that I invest for higher returns, that is the one that I will choose.
Thanks for your detailed answer. If you have any questions related to this or any other investment options or related to your financial goals, feel free to book a free appointment with our financial planner. The link to the free booking is given in the description below this video. Also, will you be interested to attend insightful investment webinars? then feel free to register for our upcoming insightful enlightening investment webinar, and it is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give a thumbs up. Also share it in your social circle. If you are not subscribed to our YouTube channel so far, please subscribe now. Bye.